Gold went parabolic and created all-time high. Now there is no historical reference on the charts in terms of support or resistance. And many traders would be thinking how to catch this rally. Is it going to touch 3700 first, or is it going to drop to 3500? In this video, I'm going to cover a unique method to understand the levels where to get in and what should be the next target. In the coming week, we have interest rate announcement from European Central Bank. It's going to be crucial and volatile for all European pairs. And in the coming week, we also have annual revision of NFP numbers from the US and inflation reports from the US. So in today's video, I'm going to cover dollar index, GBP dollar, crude oil, silver, and gold. So let's begin with chart analysis, and the first instrument is dollar index. I'll start from the monthly here. And based on the monthly frame, I'm going to apply fib extension in the bearish direction. I'll start from the all-time high. I'm going to connect with the low, first low, and then the lower high. So let's apply our first extension in the bearish direction. Applied, and I'll make it red here. And the next one here is I'm gonna connect the lower high with the new low and the latest lower high. It did not help much because I did not get to see her magnet. So I do not see duplication of fib lines. So I need to apply fib extension one more time. So here I'm going to connect with the new one. I'll select the latest lower high with the new low and the next lower high. So I'm just covering all bearish cycles here. Done. So we got to the extension here. This is already tested, and we are still running, and dollar index is still running bearish. So based on MACD, the environment is bearish. So I will bring the vertical line on the point C, that is the lower high, and move to the next lower time frame, that is weekly. Now starting from weekly, I need to align the vertical line with the highest point aligned, and I need to look for the new cycle. So here I do not have the choice to apply fib extension. We have only starting point and low point here. I do not get to see here pullback point. So basically new lower high is not yet done, and the environment shows that dollar index right now is under the pullback based on the weekly chart, but the momentum is missing. So I'll move down to daily now, and on the daily frame I need to look for the new extensions here. So I'll select the highest point, which is, again, I need an alignment. So it's already done. So the vertical line is aligned with the daily highest point, and I'll connect with the low here and the next lower high. So I'm selecting the pullback highs, lower highs basically, which are aligned with the high momentum area based on the histogram volume here. So let's connect. And this is done. And I need to change the fib extension color here to differentiate. And I'll move the vertical line to point C here. So starting from the vertical line on the daily frame, I can see that it is still creating a sequence of lower highs. So this is the highest point. Then we get the low point on the magnet support. And from here we got the bounce, and this creates a new lower high, and then again a sequence of lower highs. So in short, we can apply one more extension in the bearish direction on the daily frame. So let's use it and apply the next extension downwards. Done, and shift the vertical line to the latest lower high. And the environment on daily chart is negative, bearish. So most likely dollar index is moving lower, and it is going to hit 96.58 followed by 96.30. And if this zone is breached, the support gets broken, then the next target would be 94.6 to 94.30. Now we can adjust and move to the next lower time frame, that is 4H. Now on the 4-hourly frame, I can see that starting from the vertical line, we got the push lower. So started from the vertical line top, point A, and here we get the first low and the lower high. So we can apply one more extension in the bearish direction. This is done, applied, and we can move the vertical line to point C. So the closest target is 97.16 here. Once 97.16 gets breached, then the next one would be 96.58. So this is the first one, followed by 96.58, and I can see here a very strong support magnet around 96.30 or 22. So do not forget that on September 17th, we have rate of interest announcement from US Federal Reserve. And most likely the market is going to price in the rate cut. It means dollar index would keep moving lower until September 17th. And then after the announcement is done, we can expect a sharp pullback for the corrective bounce. So the idea here is unless it remains below 98.69, we are looking for the downward target of 96.58 to 96.22. And if it gets breached, then we can look for the next zone, which is 94.69 to 94.60. So in short, dollar remains bearish. So the next instrument is pound US dollar. And here I would like to start from monthly again. We need the alignment here, and based on the monthly frame, due to bullish divergence, so we have low and lower low formation here, and the divergence is completed, bullish divergence. So based on bullish divergence, we are expecting buyers to take over. So I need to apply here the breakout structure point. So we have a double top. So 1.4218 is the breakout structure point, which is not yet done. But I can see starting from the lowest point, bullish cycle is completed, and we can also look for break of trend line here. So if the breakout structure is pending, we can apply alternative method of trend line. So I'll start from the highest and I'll diagonally connect with the BUS point. So I need to apply a trend line here. And yes, the falling trend line is breached. It means the buyers have taken over and we have the first bullish cycle here. So I'm going to connect low with the high, first high, and the higher low based on histogram. So this is the pullback point, higher low. So I need to apply fib extension in the bullish direction. So point A to point B and point B to point C applied, connected, and let's keep the extension color as green. And I'll move the vertical line to point C, and pound USD gets blocked at fib extension 618 or the price level of 1.3745. And I need to move lower to the next time frame, that is weekly here. Now based on the weekly frame, after hitting the fib resistance, it started pulling downwards, but when we need to check the retracement, we need to apply fib retracement measurement here. So I'll connect the lowest with the highest. And after dropping below 23.6, it quickly bounced back, and now it is maintaining support at fib retracement 14.6. So the price level is 1.3494. So 1.3494 is acting as fib level support, and the next one is 1.3354, which is fib retracement 23.6. No more information. The only information is that based on histogram, the environment is corrective under pullback. I need to move down to the next lower time frame, that is daily. Now based on the daily frame, after completing its bullish cycle with bearish divergence on the top, so I'm talking about the high points here, H1, H2, it completes the higher high pattern with bearish divergence on histogram and MACD lines. I was expecting sellers to take over. So we got the breakout structure completed here. So price moved lower than the BOS point, but could not continue, and the last two lows were formed with bullish divergence, and the breakout structure is here. So based on the latest bullish divergence, I need to apply breakout structure point level identified here, and right now we are below breakout structure level. So we come back to our alternative method of trend line. So I need to connect the highest point with the latest breakout structure point. So it's here, and I need to connect with a diagonal line here. So let's connect, and yes, after a shallow drop, shallow pullback, I could see that buyers, they have quickly taken the price higher than the falling trend line, a mild corrective pattern here, and I'm expecting continuation here. So how we can measure how far this can travel? So again, I can see that we have latest point A here, point B here, and it has also completed point C. No, it is on the verge of completion. It is not yet done because the histogram is currently negative. So I cannot apply Fib extension. I need to apply Fib retracement. I'll start from the lowest and I'll connect with the highest. So after breaking the falling trend line, so this is the falling trend line I'm talking about. After breaking the trend line, we got the perfect retest, and we have applied retracement here, and retracement happened precisely to 50%, and now it has made support on 38.2. So unless pound dollar remains higher than 1.3434, so this is Fib retracement 38.2. I need to highlight this zone as support area. So breakout structure, the previous breakout structure line, dashed line, plus our Fib retracement level of 38.2. So this forms our nearest support, and it has now taken the price higher than retracement 23.6. So this was the major resistance, which is now breached, and based on histogram pattern, I'm expecting buyers to take over, and this makes sense because dollar index is right now under pressure. It is bearish. So if dollar index remains under bearish pressure, then pound dollar should be under bullish pattern here, and I have to move down to the next time frame. So based on the next lower time frame, I need to apply a trend line here. So a new trend line applied, and now pound dollar is sitting at the falling trend line resistance. So for the time being, we can expect some drop here, and if buyers, they are able to take the support at retracement 38.2, that is a price level of 1.3434 to 1.3390. I'm expecting continuation in the upward direction, and the first target would be 1.3579. And if buyers, they are able to complete and break, I need to apply one more extension here. Give me a second. One more extension applied. Yes, if buyers, they are able to complete the breakout above 1.3579, then the next target would be 1.3614. So in short, the plan is, unless GBPUSD remains above 1.3434 or 1.3390, I'm expecting 1.3579 to 1.3614 as the nearest target. The next instrument I'm going to talk about is crude oil. Now I'll start from the monthly frame here. Now, on the monthly frame basis, long-term scenario, it created a higher high pattern. So a new high was formed, and then it started rolling downward. So basically it is under bearish retracement correction. So I need to apply a retracement starting from the lowest to the highest. That's it. No more information. Only on the basis of MACD histogram, I can describe the monthly frame as under correction, under pullback, basically bearish. So I'm moving to the next lower time frame, that is weekly, and starting from the top, I could see here higher high formation with bearish divergence, and the breakout structure was completed. So I need to apply Fib extension in the bearish direction. I'll start from the highest, point A identified, end of first bearish cycle, and this is point C. So point A, B, and C to be connected with fib extension in the downward direction. So let's use and apply our first extension in the bearish direction. Applied, and we'll keep it red, and I'll bring the vertical line on point C here. So first bearish extension applied. I need to look for the next cycle, and we have high aligned with the positive histogram. We got the first low and the next pullback high, that is lower high. So I'm going to apply my next extension here. So we need to continue with the extension unless we see a change in the pattern. So the next extension in the downward direction applied, and I'm moving the vertical line to point C. So I'll be looking for the next extension again downward. So we have new point A, and this is our point B and point C here. So let's use it and apply the next extension. Done. And I'll move the vertical line to the latest C point here. So starting from the vertical line, now we can zoom in. I can see that crude oil formed a new lower high after creating a lower low, and here these are the two low points. So we are talking about first low and second low. It's a lower low pattern, and we have lower low pattern on histogram, and we have lower low pattern on MACD lines, which means there is no bullish divergence, and sellers should retain the control over the crude oil market. So we also have a choice to apply the next downward extension because the latest histogram is now negative. So our point C is formed. So I'm going to connect with A, B, and C. So this is the last downward cycle on the weekly frame. So let's connect. So one more cycle identified and extension applied. Now I will bring the vertical line to the latest C and look for magnet zones. So we have a very strong magnet of resistance at 73.74. Then the next strong was formed at 67. And currently we are on the fib line support, but I'll switch to candles here, and based on candlestick pattern, I do not see bullish pressure here. The last weekly candle is extremely bearish. Move back to the line chart, and the closest support is in between 57.56 to 58.84, and no more extension can be applied. And if I zoom in, then I will see that the next strong magnet is in between 54.28 to 55. So in case sellers, they continue and they break the support of 57.5 to 58.84, then crude oil should touch the next magnet price of 55 to 54.28. Let's move down to the next lower time frame, that is daily, and look for the technical pattern here. So based on the daily frame, if I zoom out, you will find starting from the vertical line, we have next downward cycle here. So we have point A and we have point B, the first low and the lower high. So I need to connect one more time on the daily time frame. So I'm going to apply next extension downward. Done. And let's change the color here. Let's change it to blue. So blue fib lines are representing daily time frame, and the higher time frames are on the red fib extension lines. I'll move the vertical line to point C here, and starting from the vertical line, I can see now a new lower high is formed, and the pressure is extremely bearish, and MACD histogram and MACD lines, they are hinting towards the continuation in the downward direction. Now I need to move down to 4H because no more cycles visible on the daily frame. Now moving down to 4H, starting from the vertical line, which is taken from the higher time frame, I can see that we have the completion of cycle here. So we have point A, we have low here, and we have a lower high here. And the lower high is again with bearish divergence during the pullback phase. And this is double bearish divergence, and the sellers, they have broken the support here. So breakout structure is done here. So the environment is extremely bearish based on the 4-hourly frame. So we can connect the next extension downward on the 4-hourly frame. So point A to B and B to C identified and applied. And I'll change the fib lines to black here. And I'll move the vertical line to the point C. So starting from the vertical line, I can see the pressure is extremely bearish and the closest resistance, double fib line resistance, is from 65.11 to 65.66, and the closest target is 60.52 to 60.11. So I'm expecting continuation in the bearish direction. MACD histogram is also extremely bearish here, and the first target would be $60 mark, a psychological number, followed by 58.84 to 57.35. So we'll be expecting some bounce from the magnet zones, but if it does not create bullish divergence, or if it is not able to create higher high or higher low sequence, then I'll be expecting crude oil to reach $55 to $54 mark. And the next instrument is silver. I need to start from the monthly frame here. And based on the monthly frame, the environment is extremely bullish. I can see crude oil rising in tandem with gold. My bad. I can see silver rising in tandem with gold here. And the environment is extremely bullish here. MACD histogram and MACD lines, they are rising with full force. So I need to connect the fib extension here. I can start from this low, which is 2015 low, and I can connect with the deeper pullback here. So I'm starting from the lowest point of 2015 to be taken as point A, and this is also our double bottom area, and we can connect with point B here and point C here. So I'm going to apply my first extension in the bullish direction. So we are very close to extension level 1.618, that is price level of $41.45. And once it gets breached, then the next target would be $47 for silver. I need to bring my vertical line on point C and look for the next cycle. We do not have next cycle visible on the monthly frame, so I'm moving down to weekly here. Now, based on the weekly frame, starting from the vertical line, I need to pick the cycles here. So I'm starting with the lowest point of weekly. I'll connect with the high here and the next higher low here. So let's apply our next extension. And done. So I can see now a very strong overlap magnet formed at 41.45. And I need to bring my vertical line to point C and look for the next bullish extension here. So starting from the latest point C and looking for a deeper pullback based on MACD histogram, I can directly connect with this high and the next higher low. So I'm going to apply my next extension on the weekly frame. Done. So now we have a very strong overlap, and 36.9 is our strong support area, and 41.45 is strong resistance area based on the weekly frame. And I'll shift the vertical line to point C, and I'll move to the next lower time frame, that is daily. And the environment is extremely bullish because I could not see bearish divergence here. Moving to the next lower time frame, that is daily. Now, starting from the vertical line, I need to look for next cycle. So we have A, B, and C. So let's apply, and we'll use a different color here for the fib extension to differentiate our daily extension line. So first A to B and B to C applied, and change the color to green here. So green lines are representing our daily extension levels, and move the vertical line to the point C here. Now we are very close to, we are exactly on the resistance level, magnet resistance level. So I can expect short-term pullback here, and pullback could be towards 38.59. To round it off, we can say 38.60, or a deeper pullback could be towards 36.92, and the pullback to be taken as an opportunity to buy, because I do not see completion of divergence here. I can also connect with the next extension here. So I'll start from point A, connect with high as point B, and higher low as point C. So once it breaks above 41.45, then the next immediate target is 42.74, or we can say 42.75, followed by 44.45, and the ultimate target would be around $46 to $47 mark. So the closest support is at 38.59. We are sitting at the resistance level, but no signs against. The momentum is still bullish. So that's the reason I'm saying any pullback is to be taken as an opportunity to buy. Moving to the next lower time frame, that is 4H, and start from the vertical line here. So I need to realign the vertical line with the lowest point and look for the next target, next cycle here. So we have A here, point B here, high and higher low here. So I'm gonna connect one more time on the 4-hourly frame. Starting from the lowest, point A to point B and point B to point C joined, connected, and we can differentiate. So we can use here orange lines. So orange lines are representing our 4-hourly frame. Done, applied, and here I can see after giving a parabolic rise, now we are very close to the resistance area and it is range bound. Now it may remain range bound for a while for consolidation. It has now double line support or two fib lines coming at 40.58 to 40.74. So this is our nearest magnet support, and it is right now sandwiched in between magnet resistance and magnet support. So coiling is expected and then a breakout. Alternatively, if it drops, it can drop to, if it drops further down, it can drop to 39.22. Worst case scenario, it can drop to 38.59 or 38.38 and then continuation higher. So in short, I'm looking for the opportunity to buy. So any pullback, any discount should be taken as an invitation to buy and hold for the next target of 44, and ultimately I'll be looking for $47 mark. Now let's move to the favorite instrument, that is gold. So I'll start from the monthly frame here. And on the basis of monthly frame, again, starting from 2015 low, I can connect my first fib extension. So this is the lowest point. And I can go for a deeper pullback point here. So this is here. So I can connect the highest point aligned with it. So I'll connect with the extension here. I'll start from the lowest, join it with the first high, and connect with the higher low, so point C. And I can apply the vertical line on point C. So this is the only visible cycle on the monthly frame, and the momentum is extremely bullish. MACD histogram and MACD lines, they both are rising strongly. So no signs against. So the closest support is at 3482, fib line support. And moving to the next lower time frame, that is weekly. Now based on the weekly frame, I can connect with the next extension here. So this is low, first high and higher low. So I need to connect my next extension. And we'll use a different color for our weekly lines. So green lines are representing our weekly cycles. So I'll look for the magnet zones. So here we have at 2200, then the next magnet support is at 2598. And now the next one is in between 3376 to 3482. So 3376 to 3482 is our next magnet support, our closest. And the future magnet resistance is now visible at 4000. So it doesn't mean that gold is going directly to 4000. We have some fib lines in between, so our intermediate resistance points, but our long-term target would be 4000 for gold. Now I need to explain one thing, that gold was coiling in this area, so which would be clearly visible on the daily frame. So here we have an alternative method. So this time I'll be applying parallel channels. So once market breaks out, so basically when we see a ranging pattern, and once the range is broken, so we see a parabolic movement. So we got a parabolic rise here. Now how to assess how far this move would be? So there is a method of applying the parallel channels here. So I'll move to the parallel channel tool. I'll connect with the highest point. So this is applied, and here we go. So I need to use a different color here, maybe black. So the lowest point of the coiling range is connected with the highest point. So the highest resistance point was around 3437, and the lowest was here around 3176, and now the range is broken. Basically price has broken in the upward direction and is trading higher than the channel. So now we apply duplication of the channel. So I will clone the channel and I will apply a similar size channel as a second deck on the top of the first channel. So usually when the channel is broken and we get the duplication channel, then market moves to the middle point, that is dashed line, as resistance. But here the dash point could not stop the buyers. So now the next destination would be the highest boundary of the second channel. So in terms of price level, this is 3701. So the next destination for gold is 3617, which is based on the green fib extension line, followed by the top of the range of the second channel, that is 3701. So 3700 is highly probable, and MACD histogram and MACD lines are extremely bullish. So I'm going to apply our new extensions on the daily frame, starting from the lowest of the channel here. So this is the lowest point, point A, taken on the daily frame. This is the first high, and this is our higher low. So I'm gonna connect our first extension on the daily frame. Applied, and I'll change the color to blue here. So blue lines are representing our daily fib extension lines, and I'll bring the vertical line here. Now I need to see the duplication here. So I could see that our extension line, blue colored extension line, is precisely overlapping with the top of the boundary of the second channel. So top boundary of the second channel, and the confidence of fib extension 1.618 based on the daily frame is the ultimate target, super strong resistance magnet. So the future target for gold in the coming days is 3700. Now, in case we get a pullback, then the support is now at 3542. That's it. We can apply more extensions on the daily frame. Now I can shift the vertical line to the next low because it's a double bottom area, so equal price. And here I'm gonna connect the next low with the first high and higher low. So the middle point of the channel dash line was broken. We got the retest precisely on the dash point. So once the resistance gets broken, it turns into support. So here we apply our second extension now. And I'll bring the vertical line to the latest point C, and we look for the duplication of fib lines. So now I can see 3617 to 3635 as the nearest target. So when market reopens on Monday, most likely it can rally towards 3617 to 3635, completes the target, and then we can expect some pullback, and pullback could be towards 3559 followed by 3536. Then we have 3512. So 3512 to 3559 is a cluster of support. So I'm not expecting a deeper pullback here. So any opportunity towards 3559, 3536, or at max 3512 to be taken as an opportunity to buy and hold it for the next target of 3700. prior to 3700, I can see an extension around 3683. So 3683 to 3700 is the future target. That's it, and the environment is extremely bullish. Now I'm switching to 4-hourly frame, and on the 4-hourly frame, starting from the vertical line, I can apply one more extension in the bullish direction. So we have point A here, and here we get point B and point C. So let's create one more extension here. New extension applied, so we need to shift the vertical line to the latest point C here. So now I can see a very strong support in between 35.25 to 35.36. Higher than that, we have at 3559, and the nearest resistance is at 3617. So in short, if we get to see a drop towards 3559, grab it, take it as an opportunity to buy and hold it for the target of 3700. If you get to see a deeper pullback towards 3536, 3525, again, do not miss it and take it as an opportunity to buy and hold it for 3700. I'm not anticipating a deeper pullback. I'm not expecting lower than 3512. And in case if we see a break below 3512, then the next support is at 3482. And ultimately, we see now a cluster of fib lines at 3435. So long-term support formed at 3435, the previous high of the range. Now it should act as support, and 3700 is the ultimate target in the coming week. I hope my today's video was helpful. If you like my content, give me a thumbs up, subscribe to my channel, stay sharp and trade smart. I'll see you next week.